Morning, everybody. I wanted to make another updated video dealing with the balanced price range concept, how to spot it, and really how to use it, right, to give us an indication of where price may want to go, and really, right, how it should get there. This here is FOMC's price action. So very, right, back and forth, seek and destroy, but still gave us a very good example showing what that balanced price range is. So before we get into it, you should understand, right, what is just a dealing range in general. So what is a range of price, right? And the way that I look at it is whenever we clear some type of liquidity, so the first one is here, right? Look at this swing low. It clears short-term liquidity points here. So it's a short-term low cleared. And now when I see it break structure, in theory, really now clearing a buy side pool, right? That becomes a dealing range. So anytime I see some type of leg that has cleared sell side and buy side together, right? So this cleared sell side, runs up, clears buy side. So now this leg here is a dealing range, right? And this is during FOMC. So now when we see price break below, clear sell side again, and now once more, right, clear buy side. So in the same way that we just explained it, this leg here now becomes that current dealing range that we are inside of. It has cleared both sell side and buy side. So we are looking at this price leg as the parent price leg, right? The price leg that matters most here. This whole range. Now inside this range, let's have a deeper look, right, at really what was occurring. So from this low to this high, as we spoke about, is that dealing range. In this initial leg higher, notice the inefficiencies that get created. So we have a volume imbalance, fair value gap, another volume imbalance, and then this fair value gap here. So these are all inefficient areas in price as we deliver into this buy side and create this high. So once we start trading off of this high now, repricing into them, right? Notice how we have repriced into all of the discounts created. So that fair value gap, this tiny baby volume imbalance, this fair value gap here, and now the last inefficiency, which was that volume imbalance here. And notice, where does price stop exactly on this initial retracement? Perfectly at, right, that volume imbalance low. So it has repriced in all the inefficiencies created in this price leg here. I'm going to go ahead and move this range just so you can see it a little bit easier. But just remember, right, we are in this dealing range here. So this swing low and then this swing high is our current dealing range. Also want to draw your attention to notice where this volume imbalance was created, right? So the lowest inefficiency here, it's actually perfectly aligned with this midnight open. So this dotted line here is our midnight opening level. This becomes important because once we break through and below that, right, we wouldn't expect the midnight open to be breached. So just remember that, right, going forward, that this inefficiency here is also aligned with that midnight open. And that's also why you see price consolidate right around this area. So let's continue. Right, we have now repriced into all of these inefficiencies, but they don't become balanced until price trades up into them, right, on the opposing direction. As we often say, that first initial trade into it is simply that area being repriced into. It becomes balanced when we trade up and through now in the opposing direction. Right, so this volume imbalance here has been balanced because we've traded down and now up through it. This one here has been rebalanced because we traded down, back up through it. Same with this volume imbalance here. Right, the only one that wasn't fully now rebalanced would be this 1 minute fair value gap. Right, we get back up to that midway point. But notice on the retracement, we now create, right, let's not get lost, a bearish fair value gap here. So now we have, right, this little inefficiency remaining as not being balanced, this 1 minute fair value gap. And now we have this bearish fair value gap that also has not been rebalanced. So when we trade up into this, right, we're simply repricing into this bearish fair value gap. We break away, right, still not fully rebalancing it. So up to this high, that's how much this fair value gap has been rebalanced, right? So we still have that little sliver right here of price that has not been rebalanced yet, right? So continue to see these levels here. So we trade back down just into this rejection block. So now everything in this bottom quadrant really has already been rebalanced. So anything below this fair value gap is already, right, rebalanced. But still, you'll notice how price, when it creates these little discount inefficiencies, still fills them in, right? So notice how when we trade up now, we create a little fair value gap here that gets retraded into, as well as a volume imbalance here. And that also gets, right, repriced and rebalanced. So price is leaving behind no areas of inefficiency here in this price movement. Right, we had spoke about how the only areas that were not rebalanced was this little sliver in price here, because it's the remainder of this original 1 minute bullish fair value gap, and it's the remainder now of this 1 minute bearish fair value gap. So you'll see how, right, price here finally does trade up into it fully. And now when we leave it, this area here has been rebalanced. So it's not only rebalanced this 1 minute bullish fair value gap, it is also now rebalanced, right, the remainder of the bearish fair value gap here. So not to be confused now, right, if I remove this and this original 1 minute has now been rebalanced, as well as this bearish 1 minute. So both of them have been repriced into, right, twice here. And look at those candle bodies holding there perfectly. That's because this price has already been balanced. So the wicks are going higher, right, doing a little bit of the damage, returning into a volume imbalance here, right? Notice that. But the bodies tell the story, and the bodies are remaining inside of this fair value gap. So now at this point, this top half, as well as, like we mentioned, everything below this volume imbalance has been balanced, which means, right, in theory, this whole leg now has been rebalanced efficiently. Once this candle leaves this fair value gap and closes below, everything up here in this area has now been rebalanced. And that's why we see from that point, price then breaks lower and leaves, right, that dealing range low. So at that point, we then create the balanced price range. This whole area here is our balanced price range. Right, so let me remove. So as we spoke about, any inefficiency that was created in this leg from the inception all the way to any inefficiencies created later, they all get repriced and re-delivered to efficiently. So when we finally leave this low, we would not expect price to return up into this balanced price range. And this is key because this is how, right, I go about finding breakaway gaps. Right, and this is how we can find now which breakaway gaps should remain open, or I guess which fair value gaps should remain open and turn into breakaway gaps. Because although there is a fair value gap here, right, and some may think that, well, price needs to trade back up into that to be delivered, right, efficiently. We understand that price has already gone up, down, up, down, up, down, up, down, up, down, right, multiple times in this little area here. So price doesn't even need to return to this area to rebalance it because it's already been balanced. And right, using that analogy of like the paint roller, as I just explained, we've painted up and down so many times that everything in here has now been, right, painted efficiently. Everything's been repriced efficiently. And that's why we see once we leave that low, price tries to get back up into there, right, wicks reaching. But look how beautiful, right, these bodies hold right at that level. And from there, right, we break lower and just sell off. So now since we expected this to hold and this be balanced, that now gives us a bias to start looking for lower prices. So if you can understand this, right, and you are able to notice these balanced price ranges, that's very powerful and it will help your trading tremendously. Because as I say, this is often how I go about finding breakaway gaps, right, when you see me mark them out. Because now I understand that this fair value gap doesn't need to be traded into because it's below the balanced price range. And a balanced price range is a lot more than just, right, a fair value gap getting traded through with another fair value gap. While that is a classification of it, there's much more that goes into it, as we right, have seen. What's also important to remember about these balanced price ranges is that once we leave from them, so when they get created and we respect them, right, and we trend lower like we have, if price now starts trading back up into it, we would look for price to trade through it because it's already been balanced and left. So if price is returning into it, it's simply doing it to now trade through that balanced price range. And if we kind of just drag this out, right, to show where we are currently to end the week, so you'll see how, right, we trade into it initially, give a slight retracement, leave it, but create a model here, a little YouTube model, and then trade now up and through, right, that BPR. We haven't got back to the top. So this is how we can use that BPR now to say, well, if we've already traded up and into it like this, more than likely we are going to trade up and through it. So this buy side should be hit as well. So I hope you found this one helpful. It is a rather complicated and advanced kind of topic and subject. So if you have any questions, don't hesitate to reach out and I'll do my best to get you the answers you're looking for. Thank you for watching this one and enjoy the rest of your day, everybody.